All right, all right, all right. What is going on, everybody? Welcome back to Matt Money. Today, we don't really have an agenda. Just wanted to come on. I got a haircut, trimmed up the beard a little bit. Just wanted to see how everybody was doing. It's been a while since I've done a solo stream. Just an opportunity for you guys to catch in with me and me only. Q&A. We can talk about different topics. You guys can have me going down a rabbit hole. Whatever you guys see is the best opportunity to use this time. I have no agenda other than maybe talking about some stocks. We've been talking a little bit about Cash Flow Chronicles, how well Chris and I have been doing, just myself as well, having a relatively good year in the markets. Hopefully the second half of this year does as well as the first half. But luckily for me, been able to outpace the market, not quite by double, but I think I was up like 27, 28% in the main account compared to the S&P, which was up about 15, 16%. So so far, so good. So yeah, we could touch a little bit about options trading if you guys want. More than happy to do that. More than happy. Yes, Rocket Lab hopefully will be in the good graces of everything in the second half of the year. We're about to do the hot fire tests, which would be a big tick off for capital exposure risk for that as well. Wow, we're already got a lot of people showing up. This is awesome. Mark, Melanie, Johnny, Sarah, what's going on? Haven't seen you in a while. Dean Pierce as well, also great. Carl, what's going on? Hello from Great Britain. What's up, Carl from Great Britain? I should be crap. I was about to let something do this. I should be back in Europe in the second half of September. Lars, what's going on? Hopefully everybody's had a great half of the year. Let me know how you guys fared. Your biggest accounts, how much you up this year to date. The S&P was up about, Daddy Dave. Yeah, we do need to get Daddy Dave on here. I'd be more than happy. It's been a while. I haven't chatted with him. He stopped doing his weekly videos too. I was really excited to wake up on Saturdays. GW as well. I haven't kept up with a lot of his videos, but I should reach out to him as well. Good people, great friends of the channel. But yes, curious to see. Put you guys in the chat how much you're up this year in your main accounts or overall if you guys have the opportunity. But things are going well for me. For those of you guys that don't know, and I haven't really talked about it much because I haven't done a Q&A or hangout here on the Matt Money channel in quite some time. We're up to 2 Airbnbs at this point. As you guys can see, I'm at this new house as well. So that's nice to be able to kind of have ownership of 3 different properties there. We just had our first guests check out from the new house. So we bought the other house in May 10th was closing date. My sister and I partly own it each, and we split it 50-50 with my brother-in-law as well. And so, we took about a month to kind of get it up and running. End of June-ish time frame is when we actually had it available for the first rental, and they just checked out. They went to go check on the house. House looks great. So first rental done and dusted at the new house. So more to come with there. We have pretty much everything filled until we did have a cancellation 3rd week of August. So if anybody's in the South Jersey area or wants to be renting, please feel free to reach out to me. Hello, Matt. In the oil and gas business like me, where do you see this market, energy in general, going in terms of the stock investment? We can get into that in just a moment. June 29, 2024, NVIDIA, $123 a share. It's pulled back slightly. Dutch Bros has had a stoplight lemonade. It was phenomenal. Apple 211, SPY about 54.50, Q's 47.9, Palantir back above $25, Google above 182, Amazon 193. It was at 199, pulled back just a bit. Bitcoin a little bit below 61,000. I loaded up on a little bit more. We'll see. It's got my nerves going a little bit. I'm like, is this it? I was hopeful when we saw a little bit of the pump that we were going to get to the 150, 180 mark, and it's kind of been stagnating. But give it a couple more months, and hopefully, I think this is what happens, right? You get the jitters, and hopefully, we'll be able to persist through, and we'll have that spike up, and I can sell at the top, right? I'm not a big timer, but with Bitcoin, you kind of have to be. Oil prices back in the $80 range, $81.54. Natural gas, $2.60. So pretty good. A lot better than it was at the $1.90 or whatever it was just a few months ago. So hopefully everyone's doing rather well. Mark, what's up, Big Dog? Nothing has changed over the year for me. Been buying more Palantir Some Rocket Lab rolled over your Google into Amazon. Nothing wrong with that. And let's see, there's some 30%, 42% in your Roth. Dean, that's phenomenal. Lars, 27 year to date. That's phenomenal. But in terms of oil and gas stocks, the market right now is in consolidation mode. I think a lot of people are still looking to potentially double down into the Permian. So you'll have some players like Occidental, Devon, EOG. You just saw Crown Rock get bought out by Oxy for $12 billion. I still think there's a lot of opportunity for consolidation in the Permian. And I think that's going to persist. I don't foresee us leaving that, right? About 50% of the production from the United States, I know the number is going to be wrong, right? But about 50% in its simplest form comes from the Permian, which is West Texas, Delaware Basin or Midland Basin, and a shit ton of oil, and a lot of water as well. But I think a lot of people are trying to consolidate in that particular area, and I think there's still a large opportunity for people to consolidate. And whether or not people buy out other companies to be able to just get them off the list is far and few between. I think now more than ever, the way I view it is it's not necessarily about growing your company's footprint globally. It's more about getting a few really key plays in your portfolio that you can hyper focus on. If your company can grow 1 million barrels in this basin, 1 million barrels in that basin, and 1 million barrels in this basin to make 3 million barrels a day, you can really start to focus on infill, efficiencies, understanding versus, and I see this a little bit as well, when you have so many different plays and assets in facilities around the world, things aren't 100% the same everywhere you go. You're not going to drill a well the same in the Permian as you are going to be in the Gulf of Mexico Shelf or the Gulf of Mexico Deepwater or in Guyana or Trinidad or the Middle East or Iraq. Everything's going to be drilled differently. There'll be some similarities, but they're all going to be disparate designs. And with that, you lose efficiency between going in between the three. So if you're able to solidify down into one particular design, you're going to get margin. And I think that's going to be the name of the game going in between now and 2050 as people are focusing more on net zero. People are focusing more on getting towards renewables and getting towards solar. I think it's going to be about consolidating. So you're seeing a lot of people eliminate more auxiliary positions in their portfolios. So what does that mean in terms of stock price for a lot of these oil and gas companies? So in terms of stock price, I think what you're going to see is, to be honest, I think stock prices are pretty fair here. Without some sort of war that increases oil prices into the $90, $95 range, I just don't see a huge run up. You're continuing to see, and we saw this a little bit in the 2010 to 2014 timeframe, which led to the last big dip. You're seeing oil prices kind of hang out this $80, $85 range. And that gets you comfortable enough where you're going to continue to spend. So you're not focusing on reducing capital expenditures. It's also profitable enough for other small mom and pops to be involved. And so what does that do? That instills continued inflation into the industry. And so when inflation continues and the oil price stays at $80 to $85 a barrel, over time, you're going to shrink your margins that you actually end up getting. And so one of two things, really, I guess three. You stagnate in terms of the oil price. The oil price stays where it's at, and you're slowly going to see margins go shrink and shrink and shrink, just like they did from 2011 to 2014. And then we had that recession associated with just having too much supply. I think we're in the same boat right now. We're 2.5, 3 million barrels a day of OPEC curtailment. So I think we're just oversupplied right now due to the United States continuing to drill. Everybody in the Middle East, as well as elsewhere, continue to do really well and finding more oil. Namibia is not helping. Guyana is not helping. So you have all these places that are continuing to find oil, and people are starting to transition. And I think that's putting a demand hindrance. We're still growing 1 or 2% per annum, but comparatively to how much oil we've been able to find, over the past 10 years or so, and actually put online, we just can't keep up with the demand can't keep up, so there's too much supply right now. That being said as well, you could be in a situation where you're at a war or something like that, and then you end up having what happened in early 2022 with respect to a lot of the supply chains getting disrupted, and you have the short-term price crunches, etc. So you have that. Then you have the opportunity for a depression, right? And we're already able to stomach the 2.5 to 3 million barrel a day oversupply of oil for now, due to the OPEC constraints. But I think OPEC is losing a lot of its power. I would say you have a lot of people pushing their elbows out in OPEC saying, I'm not cutting this amount or I'm not cutting that amount. And you have some numbers that are kind of being hidden. And I think overall everyone's doing what they need to do with respect to OPEC. But I just think that there's too much supply in the world right now. And so to me, there's more downside risk exposure than there is upside, unless there's some sort of war that unfortunately breaks out. And I don't want to see that happen to anybody. Hot's Heavy, what is going on? Hopefully things are going well. Solid SG back there. It is the Cherry SG. Thank you for noticing. But so yeah, 31 of you guys in here. I thought I had a lot more because I am streaming to X as well, but got my confidence up, but it is what it is. But hopefully we can have a good conversation. Hot Coal joining in the conversation as well. Answer any questions that you guys might have. Otherwise, it might be a short conversation. But for me, the biggest plays that I have in the fire right now is Palantir, Rocket Lab. Let me pull up my spreadsheet here and see what the biggest positions are in the portfolio. Bitcoin's up there as well. And these are individual stock positions, right? I won't say what the number is right now, but we're looking pretty healthy on that end. Amazon, I'm up to about $71,000 investment. Google's about a $69,000, $70,000 investment. Shell even is a $62,000 investment. Rocket Lab's about 80. So in terms of the largest positions, 1, 2, 3, 4, 5, 6. We'll just say these top 6 positions here. Palantir is about 114. Rocket Lab is 79. So that's the second largest individual stock position. Amazon is 71,000, Google 69,000, Shell 62,000. So just those 5-6 positions right there is about $450,000, and that's not including the SPY position that I hold. It's not including the TQQQ position I hold. So we're talking about pretty big numbers here, and we're doing rather well. So that's all I can say. That's all I'm willing to say. Things are going well in that remit. What are my thoughts on TMF? I don't think TMF is a bad idea. I just think it might be a little early. Little early meaning like a couple weeks, right? I'm talking about months. But for those of you guys that don't know TMF, let me pull it up. TMF is the 20-year bull cycle. We're going to pull up. There we go. So Chris and I talked about this on Cashflow Chronicles a good bit. And so what we're looking at here is the last day. Let me pull up the last 5 years. So if you guys can remember, 2021, 2022 is when he started having massive amounts of interest rate increases. So obviously, late 2021 is when we started increasing rates. You can see it went way, way, way down in the wrong direction. Now that we're getting close to peaking out, you can kind of see we've kind of been peaked out on rates now for about a year and some change. And this kind of has stayed within a kind of a window here. The thought process is, whether or not it plays out fully, is once you cut interest rates, then the bond funds will go well. And why is that the case, right? So right now, when you think about all these bonds that are out there, they're yielding 4%, 5%, 6%, et cetera. Maybe not 6%, but you understand what I'm saying. 4 to 5%. You start cutting your federal interest rate. Now you're going to start looking at the 3 to 4% range. What does that mean for the bonds that are out there yielding 5-6%? Well, you can now sell them at a 4% because shit, the only ones that they're selling and refreshing at 3 to 4%. So you have that opportunity to then inflate your price of your bonds that you have at 5%. So what does that mean for bond funds? It means the actual principal of those bonds is going to go up, right? The exact opposite would happen when we started raising interest rates, right? So you remember we started raising interest rates in late 2021. You can see this bond fund continuing to decrease. Keep in mind, this is bullish, right? 3x bull. So it obviously didn't get impacted as much if you just look at TLT. But now we're looking at the 3x bull, and you can see what happens here when and the same thing late at the end of maybe TLT is a better example. It's the non-triple leveraged one. It's just the normal. But you guys remember when everyone was chit-chattering about how interest rates were going to start getting cut in February, March of 2024. And so everyone was starting to get all happy, and the rates started kind of decreasing rather rapidly because everyone thought they were going to start getting cut. Chris Patel and I rode this, from the low 80s to like the mid 90s. We sold a little too early, but we did sell. And it's kind of just been in this channel now waiting until you actually understand. Now that we're in this place of, hey, you might actually get some cuts. Could be a good opportunity, but who knows, right? I mean, it could be data's too good still, and you have to wait till September. And then you're just sitting there kind of at the mercy of the Fed at that point, and who knows. So to go back to this question, do you think there's going to be a small cap rally? I don't know. I'm not 100%. I'm not certain what you mean. Keeps talking about will be a massive dilution event. I'm not 100% sure what you mean, or what stock you're referring to there. But yeah, do I think there's going to be? I do think there's going to be some upward pressure and tailwinds for small caps when you do see these rate cuts. But do I think it's going to be as crazy as I think everyone's been proposing? Like Tom Lee, I agree with a lot of what he said with respect to Bitcoin, S&P 500, etc. But do I actually think it's going to rally 50% between now and the end of the year, which he's stated, the Russell is going to rally 50%. And to give you guys context, why is he saying that, right? Let's do the IWM, which is the Russell 2000 index. Whoops. And I'll share that really quick. So for those of you guys that haven't been following the Russell too much, it's really been flatlined since interest rates have been rising here. So it did top out at like the 220, 240 range. And it's really just been flatlined in the 180, 190 range. And it's been seeing a little bit more love as people perceive that interest rates are going to get cut in 2024. It's been seeing a little bit more love at that point, but nothing too extravagant. But Tom Lee thinks that once you start cutting these interest rates, you have a lot of companies that require a lot of cost of capital. They don't have the scale or the efficiencies of, say, the Magnificent Seven or NVIDIA or et cetera. And so they really benefit from that extra 1 or 2 percentage points that they're able to not have as a cost of capital. But yeah, there you go. So Palantir, Rocket Lab, a few others going into Tesla. Congratulations. I hope you do well on the Tesla thing. I'm just waiting for a little bit more. I don't think Tesla's a bad company. I just think it's still overpriced for what it is today. And hopefully the robots can get a little bit more in the future. And hopefully then I'd be a little bit into dabbling into that. $80,000 in Rocket Lab. I've been trying to keep up with your share count. I got to keep up a bit more. Don't try to keep up with me, man. Keep up with yourself. I have a portfolio that I shared the top 10 positions. That's not even including the ETFs, right? So sorry, not top 6, because I want to include Bitcoin in there. And that was 450,000 just for those 6 positions. I own way more than that. I didn't mention Dutch Bros in there. I didn't mention NextDecade Energy. I didn't mention a lot of these other companies that I have positions in. I didn't mention the UDOC stock that I have from being employed at UDOC. So, there's a lot of money that's in there that's not included in what I kind of shared. So, don't necessarily try to keep up with me, right? What I'm showing is, yes, 80,000, but that's on a much larger portfolio. In fact, if I'm not really good with math, what is that in terms of like percentage? You guys know I'm not good with math. Yeah, it's like, less than 5% or around 5%, right? So don't get stuck with what Matt has, there's that. What's up, Matty? What do you think of the new Yield Max stocks? I'll just say it. You curious about Yield Max? Go talk to Dark Dividend, the king of Yield Max. He's done extremely well. He'll tell you he's pretty much been able to quit his traveling nursing job because of it. So I won't talk about Yield Max on here. Yeah, just not a fan. Go talk to Uncle Darth. Yeah, our dividend journey, man, no more. Yeah, the rebranding I think has gone well. I liked our dividend journey, but as I matured, my portfolio has matured with me, and we no longer talk about the dividends, man. Even you think about it, Palantir doesn't pay a dividend. Google pays a dividend now. Amazon doesn't pay yet. Keyword. Shell pays. Bitcoin does not pay. So, which reminds me, that Bitcoin position, I did buy some long calls on Bitcoin, hoping that we'll see a reversal here. And if we do, your boy is going to do well. But if it doesn't, and I think they're leaps, so I have some time. But yeah, I think I'm down like 30% on them or something like that. So it's not good. Not good at all with respect to those options. But it was only 20 grand. So worst case scenario, it goes to zero. Talking about small caps in general, all the capital constrained companies finally getting an opportunity to issue shares, raise funds. Oh, very good. Yeah, I don't know. I haven't really thought about that as much with respect to them diluting shareholders and stuff like that. New green screen. I know. I'm poor. Told you, man. Map money to zero. I don't know what to tell you. I'm broke. I don't have the. I had to move into a house because I'm poor. I'm so broke that I had to get rid of the 25th floor penthouse that I was living in. And actually, real story about that. I moved back from Trinidad in 2020 and was looking for a good spot. I've always wanted to live in like a high rise, but I never had the opportunity. I thought about it before I moved to Trinidad. When I moved, when was that? Like 2015, 2016? No. So I guess so. Yeah. And didn't get a high rise in 2015, 2016 before I moved to Trinidad. And so when I came back, I was like, all right, I'm definitely going to move into a high rise just to see. And it felt like the perfect situation because that apartment was on the 25th floor, had a dope view, had a sweet balcony. And what my hope was the the block closer to downtown, which would have been built in front of like that view that you guys saw. I don't know how tall that other building was supposed to be. They were supposed to build condos. And my hope was to actually buy one of those condos because, dude, it's a sick place. Like, what if I needed to stay downtown or like, eventually I leave Houston or something like that and I need a place to stay. And it also just had a sick view. So I thought I'd always have renters if I wanted to Airbnb it or whatever. And unfortunately, the company that bought the land that my apartment building was on and built the apartment building that I was in sold. And they scrapped that condo project, which I was pretty upset about. So I never ended up buying that condo because I think at the time they were supposed to sell for like 250 or 300 grand, and I would have definitely bought one. And unfortunately, never got to buy it. Where do you work? I work in an oil and gas company called UDOC, Undisclosed Oil Company. If you're really curious, look me up on the internet. I'm sure it's really easy to find. Many people have found me on LinkedIn and friended me on LinkedIn if you guys are truly that curious. What stock are you more bullish on from now until the end of the year? End of the year? I don't like these time constraints. I think Dutch Bros has been on a bull run. It needs to pull back a little bit because your boys got some covered calls that have been breached. Google's been on a run. I don't know why, but I'm fully expecting Amazon to go to 205 after their earnings call. Um, if you really want to know who I think is going to do best by the end of the year, if I was a gambling man, I would say Bitcoin, because Bitcoin has until like mid 2025. That's like the typical cycle for it. So I don't know. Uh, what percentage do you keep your company stock at? I'm wondering you should start trimming your ESPP. Um, I will bluntly say I like to find other positions for my company stock. So whether that's buying more real estate or putting into the S&P 500. Um, at the moment, I don't hold a very executive like position at the company, so I don't think I'm really forced. And I also don't get paid a lot in stock based compensation. Um, and so it's not like I have salary, like multiple years salaries worth of it, but I have a couple tranches coming in next year. Um, and with that, I'll probably sell and put it into the S&P. And the reason being is my entire salary comes from that company, right? And so I like to have it into something that I can control a little bit more, which is diversification and putting it into say like the S&P 500. And it's not to say that I don't see the long-term future. It's just I'm already over allocated into oil and gas as it is with my salary. And so I don't necessarily want to have so much oil and gas exposure. If anything, I would put it in the NextEra because I think that NextEra is a great utility company. They're growing on the renewable side. They're going to be around a lot longer. There's just like a strategy shift piece that, me as somebody that wants to look out 10, 20 years, trying to understand, and I'm a younger investor. If I was dividends only, I'd be a little bit more focused on keeping in the company stock. But yeah, that's that. Wise words to diversify and use ETFs, not to use individual stocks. Yeah, I'd say, where am I at? And this is not including my 401k, right? So this is, whoops, I just screwed that up. I'm not sharing a screen, by the way. That's too many big numbers that you guys are probably curious about. The not including 401k and other retirement funds, 40% of my money. So if you were to include the 401k, that's another 15 or so percent. You would include that, it's another 10%. So whatever 40 plus like 25 is, what is that, 65-ish percent? So probably 60 to 65% of my money is in an ETF or ETF equivalent. And yeah. So there you go. Hopefully that gives you an idea. And I'd like to get that closer to 80. I just keep buying fucking Rocket Lab. So it is what it is. Yeah, for Rocket Lab, it's just a friendly competition I have that you knew nothing about. Yeah, as I built on my position and then wasn't coming from a place of matter. No. I know that. I just think that, I try to disclaim that because I see a lot of people seeing like now that I have 16,000 or whatever shares of Rocket Lab, they're like, ooh, I need to increase. And I'm like, dude, like I'm okay losing 80 grand. Like you live under a bridge and part-time you live in your mom's basement. So probably not the best idea for you to put 80 grand. Now, do I believe you're going to win with that trade? Of course. I think, I wouldn't have $80,000 in it if I didn't have a lot of conviction. And I feel like I've learned enough from getting burned on other stocks that this one, I think my due diligence has done well. I believe in Pete. We've had him on the channel. Well, we had him on Vince's channel, and then, I made a video about it. But I've talked to Pete in person and interviewed him, and he was a really good guy. And I believe in Pete. I have hair, everything on this shirt. I got my hair cut today, so I haven't showered yet. I'm itching like a muh, so I need to eventually go and take that shower. But yeah, so me having 80 grand in Rocket Lab, most people should not. So, oh, there we go. I just answered that one. Thanks for coming to the channel, my guy. Hopefully You subscribe to the YouTube if you haven't already. For those of you guys watching on X or chiming in on X, be sure to come over here to the YouTube, because that's where I get paid more. I don't get paid more or paid anything rather at on Twitter like most people do. Most people are ballers and actually get paid. I do not. Matt, would it make any sense to sell a position and turn around and buy long-term close to money calls on the same stock? I can't speak for you, man. I don't know what company it is. I don't know what your objectives are. I don't know what time horizon you're looking at, and it really just depends on what kind of company, right? I mean, if you're talking about Snowflake, I think Snowflake is a good opportunity in the short term. I think, it'll be 1 or 0, right? It'll either have a good second quarter and rally from that because they're sandbagging, or it'll continue to see some pain. But I think it's been so oversold and it's already recovered quite a bit. So I thought about, and I never took the opportunity to dive in the low 120s, and I wanted to, except for the the public portfolio that I have with Chris Patel. But what is that, 1 share or something stupid? So yeah, I think that one was a good one. What other companies would be good to kind of turn around? I don't know. A lot of companies are trading pretty hefty right now. I think if you wanted to be ballsy and do a Bitcoin between now and the next 6 months to a year, I think that would be probably prudent to do. That's what I did. I forget what I had. I had like some dividend stock, and I was like, I'm buying Bitcoin. What's the worst that happens? I lose 20 grand. My thought process was that it'll either end up being 60 grand and I can then sell it, wait for Bitcoin to come back down in price at the end of 2025, early 2026, and then put it back into Bitcoin, and then have like 2 or 3 Bitcoin rather than just 1. But that's just me. I'm willing to gamble that, right? It's a $20,000 gamble. So drives me nuts that I have stock locked in ESOP. Well, I think you should view it positively, right? You have stock that eventually should vest, right? Chance of getting you, Dave, Jerry together for an old school stream. I'm not objected. I like those guys, so we didn't leave on bad terms. I think Dave's the only one that fucking left. Dave deserted us for some Appalachian Trail adventure where he almost killed himself, and then not because he was depressed, but because it's a tough thing to do. I mean, he kept spraining his ankle. But yeah, no, I didn't mean that from a place of maliciousness. But yeah, Dave's a good guy. I actually he lives not far from me actually here in Houston. Like I need to, like, what the actual F? He'll probably meet me and be like, I don't want to talk to this guy anymore. But I don't want to put words in his mouth, but I'm fairly certain that's what he would say. He's like, meet me, shake my hand. He'd be like, okay, I've had about enough of this guy. But no, it needs to take me for a ride in his fancy $100,000 car. Sorry, I skipped something. 30, you're up 30% in your NVIDIA share price alone. Congratulations, Mr. Smith. Your ESP is locked up for 5 more years and appears to track the SPY. Interesting. I would also like my shares to track the SPY. Gotta get that Matty Moolah YouTube. I'm trying to be like you, my guy. Good seeing you the last, what was that, 2 weeks ago? Yeah, it's good seeing you. I need to do it a little bit more often. Diversified 50% of ESP, but the rest is locked until 2029. Yeah, that's tough. That's tough. I got a tranche in 2020 and a tranche in 2022. So them being locked up for 5 and 3 years respectively kind of stinks. As far as space-related stocks go, and mostly in Rocket Lab, but if you looked into more some of the other ones like ASTS, opened up a small position, but they aren't making much revenue at the moment. There's actually a few companies that have started to turn the corner, Redwire being one. They're actually EBITDA positive, and you have Black Sky as well. And, I'm not opposed to them. I just think if anybody's going to excel, it would likely be Rocket Lab. And so I'm trying to, what am I trying to say? The reason why I think Rocket Lab will be superior is because they are literally trying to cater to everybody, right? They're not trying to find a specific client or anything like that. They've now gotten 4 or 5 different satellite designs that they can have depending on what you're interested in. They have the ability to launch small satellites into space. They have the ability to launch mega constellations into space, hopefully by middle of next year, late next year. And so to me, in terms of if you were to compare other companies to what could be in the future, um, you know, Blue Origin can kind of come out. I'm curious to see what happens with New Glenn in October. But really, it's a SpaceX is your biggest competitor. But even still, I think there's enough TAM growth that's going on in the market right now that you should be quite all right going forward. Let me just make sure that my audio is pulling into the right one. Yeah, so it's in the Yeti. You guys can hear me okay? Yeah, just let me know if you can't. Cool. But yeah, I mean, I'm not saying Redwire's bad. I think Black Sky is going to get acquired. If it doesn't get acquired by Rocket Lab, it'll get acquired by somebody. But yeah. Interesting. Yeah. Yeah, I'm not going to say that. I don't know what that means. So, 2029, same, but our growth is scheduled to 2x between then. So there you go. Bitcoin, my guy. Yeah, all about the Bitcoin. Bitcoin's going to be a good one. It's going to hopefully triple from here. Triple from here. Innovation stocks. Good one. Joe Rogan's nipple. Turning in late. You've already covered it, but what's your conviction on the Bros? I think Bros is good. I think it's overpriced right now. But, the thing that scares me a little bit about Bros right now is, and hopefully it'll make sense throughout the rest of the year, their CapEx has actually gone up. So I think they're going to spend 250 to 300 million this year. And their EBITDA is supposed to be about 180. So they're still going to have to come out of pocket. And I know that's part of the reason why they did the convertible debt offering. But my question is for them, they want to get to 4,000 stores. They're at 800 right now. So they have 3,200 stores. So you have to grow by 4x between now and the next 10 to 15 years. And I think you're growing at, I haven't looked at the numbers on a little bit, but like 150 stores a year or something like that. So, every 3 years you're growing by 450 stores and you're spending, about 2 million a store to open it. So, my question is at what point do they actually kind of get to a place where they're EBITDA positive, right? So they're doing well in that respect, but they're outspending the amount that they have on the books. So, or that it's coming in, right? So there's a balance that they need to do about and I don't know what the answer is, right? Because their gross margins are so good at 30 odd percent that it's like, well, you don't want to slow that down, but at the same time, it's like you don't want to dilute shareholders. So you're kind of stuck between this rock and a hard place of being like, well, we could slow down and not open 150 stores a year, but it's like, well, you're also opening 150 stores a year that within a year's time are generating 30% gross margin and do really well to the bottom line. So it's like you're stuck between this grow while the iron's hot / and so you're not all your capex is covered, which kind of scares me. So my hope is within the next year it does. But to me, if you think about it, let's just do a quick look at Bros. I'll pull up on the screen. But with Bros is actually grown pretty well year to date, about 30 odd percent and 45% in the last year. And their market cap right now is about 6.4 billion. So let me do some math for you guys, but I want to say they're trying to get to 180 in EBITDA. So let's take 6,400, 6.4 billion divided by 180. You're looking at a price to EBITDA of like 35. So it's a lot, I'm not saying it's bad. It's just it's kind of pricey, but you're also growing rather quick. So, is it awful? No, I don't. If it was worth 10 billion, I think it'd be a little bit ahead of its time. So I just think they need a little bit more execution. I'm curious to see if their costs are going to continue to go up, because I know that they noted that the costs for not Rocket Lab, Dutch Bros, and opening them was going in the wrong direction as well. So I'm hoping they could still open 150 odd stores for 250, $300 million. Yeah, man, I love you. We got to get lunch more often. You're a good dude. Always enjoy talking to you. Any chance of playing the World Series of Poker? I'm not good at poker, so probably not. I feel like it's hard not to just dump more into Rocket Lab at this price. It's not, since it's still very undervalued. I would agree. I mean, in terms of potential, I think the problem is that it's just not making any money at the moment. And, it's a year from being in a cash burning mode with Neutron. So it's tough. Yeah, it's tough to put a lot of money into a company that it's, one, a space company, so that's a hit against it. Two, overspending. So let's see. I know you've talked here about long-term plans. We go into it a little. What point are you switching back into income investments? You staying in the U.S.? I'm in a very different place. So when I was really focusing on income investments, I didn't have a lot of money. So now that I have income and now that I have a little bit of money, it doesn't require a lot of dividends to get some money to live off of, if that makes sense. So, how do I say this? So, do I have, let me see if I have this is okay to share. Yeah, this is okay to share. Right? Yeah, this is okay to share. So, let me show you where I was headed. So, I keep track of fucking everything, right? I'm an engineer, and that's what I do. So, let me hide this. So, I literally tracked everything from when I started investing back in 2013. This is a few months old, so I need to update this, but this pretty much has everything and all the dividend data that I have up until the last 6 months. So what this is how much dividends I was receiving on a monthly basis compared to the 12-month average. And I got to a point where I was closing in on $24,000 a year, and I was like, what am I going to do with this money? One, I'm paying taxes on it. Two, I'm working a 9 to 5. Do I actually need this 24,000? Three, if I keep adding like this, it'll be 36, 40 something, whatever. And I was like, I saw how it'd be nice to kind of have it, but at the same time, I knew that I was underperforming the market. I know I wasn't going to stop investing in the market. I had a conscious decision, and actually a conversation with Dave from Hidden Freedom to be like, you're not retiring, you're in your early 30s, you're not there yet, probably not the time. And so that's why you start seeing this rollover. This rollover isn't because I am a bad investor or anything like that. It was a conscious decision to start moving into the Googles of the world, the Amazons of the world, which at the time in January 2022 was a good time to do that, right? A lot of those companies were at deflated prices. So I took a lot of advantage of that recession in 2022 to reposition the portfolio into kind of putting me into a place where the next, tranche of investment and leg up in the next time period that I was kind of looking for, which is kind of like my late 30s, early 40s, would really come into a beautiful sort of set of opportunities and positions in the portfolio. And so you can do some math. I never was I wasn't a yield max guy, so I wasn't getting 15 or 20% on some of these things, and I wasn't investing in only Altria Group. So you could just take an idea as like what a 3-4% yielding portfolio was, and kind of see where my portfolio had gotten to by early 2022. And yes, just take 24,000, multiply it or divide it by 3-4%. You can kind of get a rough idea. And then I was like, got it. So it's like, I know I can do that, right? But it got to the point in my journey where I was like, okay, I'm 31 at that point. Am I selling myself short, right? What the fuck am I going to use $24,000 a year in dividends for? Valid point. I'm still working, right? Am I limiting myself based off of a concern of getting laid off or something like that? And the answer was kind of yes. I was limiting myself due to fear and uncertainty around financial security. And it took me an opportunity to say, Matt, you're doing fine. You're out competing yourself in terms of not compensation, in terms of capital that you have in your portfolio compared to most people. Relax, right? Put it into some more high return investments and opportunities. So it's when I started investing more into the SPY, Amazon, Google, whatever, and stop focusing so much on that. So honestly, what's my portfolio yield now? I'm not sharing anymore, right? Good. Portfolio yield now is about 1.5%. And I'm okay with that because even at 1.5%, I'm making about as much as I was back then in terms of dividends because the portfolio has grown that much. And so to me, if the portfolio yields about 1.5%, that's okay. And eventually I plan on, instead of getting into like dividends and this and that, I think to me, what I'll probably end up doing is taking a small portion of the portfolio and start doing cool projects like building houses and stuff like that. I'm not talking about building a massive company. I'm just talking like buy a plot of land a year, permit it, get 2 or 3 houses built, sell them, use that capital, put some in the market, keep building some houses. Maybe in that term, if I find a larger plot of land, maybe I'll buy and build, some larger houses, maybe one I'd move into. So stuff like that, right? And the portfolio is large, right? And so I think it's hard to relate, and I think that's why I only have 12,000 followers on YouTube, is because one, a lot of people think I make up the numbers. Two, the numbers are large, so they're hard to understand. And 3, I talk too much sense. Like, you guys just want me to stand up here. Like most people that come by the channel, they just want me to stand up here and be like, buy such and such stock, buy this hype stock, buy that hype stock. It's like, I don't need your money. Like, I don't need to be big on YouTube. You know what I mean? And that's no hit on anyone in particular. But, to me, it's about being truthful to myself. And I think that's part of the problem is the portfolio went to a place where I was focusing on dividend income. I needed $50,000, $60,000 a year just in case I lost my job. That never happened for 10 years. So the portfolio shifted. I have a 7-figure portfolio, and if I need dividends, I can find dividends, right? But I don't need them, and I anticipate not retiring for the next dozen years, maybe. I don't know, late 30s, early 40s. So I don't really have any plans right now to retire like I was back then. But I have that flexibility too if I want to, right? So it's about just that piece of it. And I like what I'm doing right now. There's no like urgency to, like, I don't wake up and dread every morning. I really like doing reservoir engineering and portfolio management and things like that. So in terms of going back to dividend stocks, I'll never have a full portfolio of dividend stocks. I might have a few that, let's just say, get sectioned off. It might be more focused on dividends, but the whole portfolio will never transition back to dividend stocks. Now, that might be a lie. In 10 years' time, I might be like, well, we're going all the way back to dividend stocks. But I just think that I've come to the understanding that you pay a dividend once you stop innovating in the company, or you have too much capital to And so you've either completely exhausted the entire total addressable market and you own too much market share of it, or you're done and you're grown to a mature stage of the company's growth and you're slowing down. And it's like, well, do I really want to be investing in companies that are slowing down? Not necessarily. And the problem is dividends are a fine line. People assume, oh, they're paying dividends because they have the money to. But a lot of times they don't, right? So the companies, if they're paying a 5-6% dividend yield, they're either super mature or they've gotten to a place where people stop investing in that company because it's just so mature they're not going to grow anymore. And really, it's just going to eat its own self. And I see a lot of companies in that. And I think a lot of times dividend investors get stuck in that trap. So this mode has worked well for me for the past 2-3 years. And I just have realized that if I need to invest in dividend stocks, I failed. You know, and what I mean by dividend stocks is like 3 to 4% yielders and focused only on that so I can make 50 grand a year. It's like I'm past that. You know, I very much realized in 2022 is it's like, okay, if I needed that money, I can adjust the portfolio to get that really quick. And I think that was seeing how 2023 was supposed to stack up and make like, I don't know, it was like 28 grand or something. Net. That wasn't like a forecast. I was like, okay, you're going to make 28 grand easy in 2023. And I was like, dude, I don't need 28 grand. Then next year, what was it going to be? 36 grand. Like, do I need 36 grand in dividends? No. Is it nice to know that I could achieve that? Yeah, of course. Like right now, if I wanted to, rather simple. I could make 6 figures in dividends if I wanted. But what is that going to do? Right? Like, to me, what's more important is getting to a place where I can actually do something with it to generate like some substantial, like 100 grand a year is great, but it's not enough for me to like legit do whatever I want to do. And I don't need 100 grand, but I don't know. I'd just be bored. So anyway, enough of that tangent. Am I staying in the US? I didn't answer that part. I would like to do some traveling, but I think I'll definitely live in the US. Yeah, how do I say this? I wouldn't mind. I've thought about in 2021 when I didn't have as much as I have now, 2021, 2022. I thought about giving up. I was kind of drained from the pandemic. I thought about moving to Indonesia and just trying that out. And I'm glad I didn't do that. But I wouldn't be surprised if my ultimate goal is to have a couple houses across the world that I want to stay in for some time. And so it's like, eventually, when I get to a place where it's like, oh, I have a place in Indonesia. Let me go to Indonesia for a month and hang out there. And then, oh, it's summertime. That house is being built in Southeast PA, Pennsylvania, and I need to make sure that everything's going okay. So let me just go home to Pennsylvania for a couple months. I like Houston, so I'd like to keep a house here in Houston. And my hope is like I could Airbnb it, whatever houses I'm in. This house I could rent. That's the original reason why I bought it. I didn't buy it for a forever home. I anticipate moving out of this house in a couple years. So anyway, that's just my thoughts. Is this on board stream? Yeah, it's on board. Going to zero. Yes, 100%. Since you're working oil, what's your opinion on uranium? I've been looking at UEC, but I come to the conclusions that nuclear would support the EV market. It's just scary. I don't know. I think that the United States is doing themselves a huge disservice, but I think the real thing that will unlock it is SMR, small modular reactors. And until those are kind of solved, I think everyone's too scared to invest in large nuclear projects because it starts with a B every time you talk about it, and tens of billions. But yet at the same time, we're doing LNG plants. So I don't know. First stock I ever bought, I think it was like either Sony or I honestly don't remember. Something like that. As soon as I heard you talking about Dutch Bros, I began to see them everywhere, but I'm unsure of retail food companies. It's understandable, my friend. It's understandable. Would I consider NEXT next decade to be fair value at $8? Really depends. It really depends on your portfolio, my guy, and if you're willing to park money there and not see any sort of profitability until 2027, 2028. And if that scares you and that risk scares you, then I would say don't buy it, right? But if you take what they've said for verbatim and everything goes well, then NEXT will have distributable cash flow in the early 2030s of $1 to $1.5 billion. And the stock right now is worth, I don't remember what it is. Stock right now is worth $2 billion. So what you're talking about is a potential distributable cash flow to price of about 50% to 75% of the current market cap of the company. So what does that mean? That means they have the ability to pay down all the debt very quickly. Potentially, they have the ability to distribute a lot in dividends, potential share buybacks, etc. But there's NextDecade doesn't have all that capital, right? So they have to come up with strategic ways to be able to ensure they are able to maintain their current equity position in the current phase 1 project, trains 1, 2, and 3, as well as trains 4 and 5. Now, there's also space for additional train 6, I think, at a minimum. And there's also, I would say, land for 7, but I don't know. I know for certain that there's land for 6. I don't know if there's land for 7. But trains 4 and 5 are really where the money for NEXT shows up. So without sanctioning train 4 and 5, it'll probably be a duster. You'll still be okay, but I think it's just going to be a long road, right? And you're going to sit there and be like, another month goes by, you haven't heard anything, and you're going to be chiming into my channel and being like, Matt, what's going on with NEXT? So it really just depends on, do you have the patience to sit on your hands? Just like with Rocket Lab, 2021, I bought it. Did I have the patience to sit on my hands? Palantir, do you have the patience to sit on your hands? They're not generating 100% today, right? So it's just, that's what you just have to realize. It's just got to be one of those companies. Do I have anything on Enovix? I do not. If you're planning on going overseas, the channel retired working for you walks through what you need with step-by-step. Great channel. Yeah. Yes. Kevin just wants us to live off SPY divvies. Only 4 million to go. Yeah, I mean, if I could do SPY divvies only, that'd be pretty dope. Some of us contribute to YouTubers just to show your appreciation. Yes, I appreciate you being a channel member. It means a lot to me. And yes, I do. Going back to Lord's Late's thing, I did want to have a conglomerate of different channels, potentially like Matt Money, Matt Travels, and do a little bit more on that end. But I just haven't gotten there yet. And I think Matt Money is the only one I've really put a lot of effort into. Google got too much cap. Sounds good. Midwest, what's going on, my guy? Innovation the next 10 years will be wild. I agree. Yes, exactly. Yeah, Dustin knows. Sorry, I didn't see that earlier, Dustin, but I agree with you 100%. When you have 3 to 5 million, then dividend investing makes total sense. Agreed. Yeah, the BITO thing, I don't know. I'll let you know because I bought one stock. Because I bought options in BITO as a leap. So I could do poor market cover calls. I bought one share, and so we'll see what I get if I get some dividends. What color is my Bugatti? I don't have Bugatti money yet, but I definitely have Lambo money. So that's why I stopped saying when Lambo. I moved to when Jet because it's more reasonable. USA, my guy. How many Rocket Lab do you have? Are you asking me? 16,500. And then I have some short puts at $5 in my Roth. So I think they're for August 2nd or 3rd. Excuse me. Thoughts on Jemiah? I don't know if I have any thoughts on Jemiah. I don't know much about it. Yeah, high conviction for trains 1, 2, 3, 4. Is Baba really a test considering its financials? Unfortunately, I still have 180 some shares of Baba. Unfortunately. Amazon will offer dividends sometime next year. I agree. I wouldn't mind that either. Because I'm just going to reinvest it, my man. I would love to get to 400 shares of both Google as well as Amazon. And I only have... I don't have my Google shares on here. I think I'm 380s in the Google. And my Amazon's about 367. So I'd like to get to 400 in both. And then eventually my hope is that they just continue to just grow and split. The same thing with Rocket Lab. Like, I would love for them to grow and split because I have 16,500 shares. And if they just split every time they hit like $50, that would be phenomenal. And same thing with Palantir. I have 4,500 shares. So that would be really dope for them to be able to. I have, if you think about it, I own 0.0034% of Rocket Lab. So I'm a one. I'm not good with it. Tens, hundreds, thousands. I own 34 thousandths. Yeah, I own 34 thousandths of Rocket Lab. Does that make sense? Yeah. Yeah, because if I owned 1%, I'd own 1/100th. Yeah. Interesting. I'll be a billionaire. I won't be a billionaire. Far from. What about or Nike in the future? I think Nike has too much wokeness going on. We'll see. Think about selling 500 shares in Palantir and throw it into Rocket Lab's thoughts, not financial advice. Why do you want to sell Palantir? Do you think it's done? Do you think you know better than I do? In terms of why you would want to sell it, I wouldn't sell either. I'd continue to just buy. The best thing you can do is continue to add capital. I added $500 yesterday to the portfolio, just because. I didn't have a particular thing in mind. I just added cash. That's the big thing. That's when you start, when you automatically, I was having this conversation with somebody. She was like, make me a millionaire. And I was like, you're already married, so I can't help you there. But 2, how much are you contributing every month? And they're like $15. And I said, well, that's not going to help you. So I was like, get 10%. They're like, well, we have X, Y, and Z expenses. I'm like, well, then don't be a millionaire. Like, I don't know what to tell you. You either find the time and money. You're not going to become a millionaire out of doing nothing, right? $20 or 20 share position in Tesla. I don't think that's bad. Rocket Lab shorts has been printing for you. Usually get 50% annualized return on investment, selling monthlies and going strike OTM. Yeah, I keep bothering myself though. I'm like, should I just buy the stock? It's like that's going to be short lived, right? I mean, I don't know. But at the same time, I'm like, I already have 16,500 shares. But if they expire in the money below $5 in August, because I was doing them for 450, and then when we went from we were hovering around 470, 480, and I was like, I'm okay buying them at 5 too. It'll be below my cost basis, so that'll get me to 17,000 shares. So, and plus, I'm making money on the capital just sitting in the Roth as well. 400 shares of Amazon would be awesome, because I fully intend Amazon. They just hit 2 trillion. I intend Amazon to be a $5 trillion company one day, and so that would mean my current position in Amazon ends up being about 175, 200 grand if there's no buybacks. So that would be cool. Waiting for $40. Nice round number. Not sure what company you're referring to. How do you pick your strikes for selling cover calls and long-term hold positions? Good question. Let's get into that. Yeah, let's get into that. For me, what's a good example? And this isn't perfect, by the way, because as you guys know, we've been on an absolute fucking run in the market the first half of the year. Some stocks more than others. But the way I generally look at it, and Palantir might not be the best example, but depending on what kind of company, how volatile it is, I generally only sell weeklies. And so what I'll do is I'll generally look for chance of profit of about 95% most of the time. So, and this is like a week and a half out, maybe sometimes 2 weeks out, specifically from the more volatile companies. And I'll open it. You'll see the delta. It's like a 5-6 here, which basically means that it's just sitting here in theta. And so theta, you're getting about like a penny a day, right? Because it's only 5 cents here. But for me, you might be sitting there like 5 cents, right? It's $5. It's like, well, I have 45 contracts, right? So, and I'm not swinging for the fences here, but if I'm able to do this pretty religiously, and make $200, what's that? 45 times 5. Yeah. 45 times 5. Yeah. $225. Maybe make $200, 2 to 3 times a month. That's just on Palantir. And then you have to think I have Google, I have Amazon. And so let's look at what I would do for Amazon right now. And sometimes with Amazon and Google, unfortunately, I've been selling more monthlies. And so I've got myself in a trap because these guys have been on a run as well. But I'll look at this and say, all right, so it's beginning of July. Maybe it's still like a 45-day out. And I would look at the same. I'd be like, if I didn't have anything on, normally I do. But I'd be looking at this 240, 245 probably. So this 240 is an 8 delta. This 245. So I might be more inclined to sell the 245. But it really also depends. And you have to recognize, I think this is after earnings as well. So you're probably going to have some elevated options contracts. But I have 4 contracts, or I would have about 3 contracts. So this would be a $300 bill right here. And if the stock just kind of hung out, then I'd probably close it at 60, 70% profit. And then, whenever that happened for the next one, same thing with Google. People are like, you're selling it too far out. You're being too conservative. It's like, I don't want to sell these stocks. I just told you, I think Google's and Amazon's going to 5 trillion. Why would I want to sell it right now at 2 trillion if I think eventually it's going to 5? I don't want to sell it. So same thing here. I'll just go to the 90, 95% and see what it is. And right now it's about a 7 delta, so that's probably okay. 215 for Google would probably be appropriate, 60 cents. Maybe I'd go to the 210 if I wanted to be more of a gambling man. I think what this is showing is they think that Google's not going to run as much between now and August 16th. They think Amazon's probably going to run a little bit more. That's what at least I'm seeing here. So, but yeah, and generally I wait for positive days. So you already know. I mean, obviously, to get a little bit more oomph, let's go to the year to date. You have these oscillations, right? So some days up, some days down. You have a nice like little oomph day, a couple percent up. It's a perfect day to sell. You have a big oomph day, perfect day to sell, because immediately it can kind of come back down. Let's just say a little bit. So generally, it's what I do. I'll wait big oomph days, and if it's down big, it'll be up, 10, 20%. If it's the whole position, 10, 20% up for that day, for that particular contract. Not the stock, but the options contract, meaning that it's lost value. And if it's lost 60 to 70% of its value and there's only 30, 40% value of it left, I'll buy it back and rewrite the contract, because all you're doing is fighting theta at that point. And there's that. So that's the covered call, really, that I do most of my positions. And I do the same thing with SPY. SPY, I do weeklies. TQQQ, I do weeklies. Palantir, I do weeklies. I don't really do any on Rocket Lab because that's going to spike one day and it'll never come back down. How does it feel to single-handedly dismantle the Finance Junkies pod? Brought two on over the next day like a rich guy stealing your girls. Interesting, my guy. Interesting. Matty Capital looking dapper today. Thank you, ETF. ET FaceTime. You're the man. Selling out of the money Rocket Lab puts on margin, letting them get assigned if they expire in the money, and I could put cash in to cover. Otherwise, you'll roll them out. That's generally what I do, man. I mean, I have it in the Roth. Otherwise, I would, but nothing really hurts. I mean, you're talking a couple contracts, talking a couple thousand. I can fund that. I'm not trying to boast. It's just if I need to, I can cover that. I'm not trying to sell like 100 contracts or something like that. I don't have capital for that. Yeah, I don't have 50 grand, but well, I do. I just don't know if I'd want to put all onto that. I play it way too safe. That's fine. I'm not trying to swing for the fences, right? Got positions. The positions I've kind of been telling you about. It's $400,000 worth of positions. I'd rather keep those $400,000 positions. Instead of trying to chase pennies, I'd rather keep the dollars. What do I mean by that? Sometimes too many people. This isn't about necessarily just the stock market, by the way. This is a very important business lesson that I hope you recognize. There's a lot of people are very penny wise, but are dollar foolish, and so they'll be like, "Ooh, I can do X, Y." It's just like you're going to lose your shares. You're going to lose your shares, and then you're going to end up buying them back, being huge in the hole, thousands of dollars, and then you're going to be like, cover calls are stupid. Happened to me. And then I realized I was playing it way too safe. And maybe you have nuts of steel. Maybe you can handle it, but I'm okay, right? I'd rather take the goose eggs and let the golden geese keep laying them rather than kill the goose. So that's me. I'd rather hit a bunch of singles than try to hit one home run and then you never have a home run ever again because you're too busy celebrating and partying. I'd rather hit a single. That's what wins baseball games. I think Palantir is overbought and should do a correction. In the news that the company does a partnership doesn't mean they're making any money off the deal, which didn't report any. Just like NVIDIA, I've been doing all this correction, all the stocks may run up and they dip being bought over, which is what month of July we'll see. Many companies do a correction. I think the month of July, that many people will go on vacation. The markets will correct this in this month. It's all a lot of speculation, man. I'm not saying you're wrong. It's just, Palantir might be overbought for sure. I just, I look at it like in 10 years' time, I know for a fact the value of Palantir at $25 today is going to be way cheap. So why would I want to sell that for another company when I know I want to own those companies, both of them, for the next 10 years? Me, personally, right? I'm not saying for you. SpaceX goes public. Rocket Lab will look cheap. Now this depends on getting them performing, but yeah, I would take profit at 15. Also cover calls at 15. One of my thoughts on CCL and Norwegian Cruise Lines. We own in the public portfolio. I didn't take the trade. I didn't have any money. Chris Patel's done really well on it. A lot of other folks in his Discord have done really well on it. Yeah, we're in it in the public portfolio. And those of you guys that don't know, we let me just share. We share our public portfolio on Cashflow Chronicles. The link's in the description. This is the portfolio that Chris Patel and I have put together. And we share it every time we stream. And so here you kind of go. You can see we have CCL and Carnival Cruise. We're up 22% and 11% respectively on those. So yeah, we bought those at a pretty decent time. Yes, I did want to state this as well, but yeah, July is generally a green month. Generally, it's one of the better performing months. People are coming back from, their initial May vacations, middle of the summer. But yeah, what else you guys have? Otherwise, I might close it down. I don't want to bore too many people. Nice of you for 48 of you guys to come on. Make sure if you're not subscribed to the channel already to please do so. It's free. If you feel so inclined, becoming a member is also useful. Eventually, yeah, sold it all for yield max. I agree. It's the way to go. Dude, can you imagine how much money I'd be making if I put all my money into yield max? Think about it. Like 30 grand a month, my guy. And then I'd have $0 in a year. It'd be fucking great. So, yeah, curious to hear what else you guys have in terms of thoughts. More than happy to stay on a little bit, but I don't want to overstay my welcome. Everything's going to zero is precisely what is going on. But it's been a while since I did a stream. Wanted to connect with you guys, see how you're all doing, make sure that I didn't completely lose my subscriber base. If you guys know anybody that needs help, eventually I'm going to be getting my license. And, if any of you guys are interested, in investing, how do I say this? I'm not going to be investing like I do my own money, right? It'd probably more so just to help people. And I think the big thing that I'm going to be taking under account when I get licensed and eventually managing capital is more so caring about how much people are contributing every month rather than, trying to get returns. What do I mean by that is I just think that specifically early on in your investing career, feeding your portfolio is more important than the actual returns. Because if you think about it, it's kind of easy to find $200 a month, I'd say, to contribute to your portfolio. And so if you start at $200, you need 100% return to get it to 400 versus if you just wait another month, you add another $200 and boom, you're ready there. So that's what I hope to kind of coach people on and get them in the mindset and methodology of doing. So if any of you guys are ever curious about that in the future and would like to potentially think about it, let me know. It'll probably be a while before I get licensed, but that's the hope, is eventually to get licensed and start helping people. I get asked enough questions that I think a lot of people just want it taken care of, right? And I can help people with that. So grilling anything for July 4th. I did think about picking up a brisket. My buddy, I just went to the barbershop. That's why I look so fresh. But he was telling me he saw some cheap brisket, and so it's only $6.24. Maybe that's what I'll go do, is see if that brisket's still there. It's too late to smoke tonight, but maybe later. You need lots of help, man. I can help, man. Hit me up on Twitter, see how I can help. And like I said, the biggest thing is contributions, making sure people do that. Matt, you're a true inspiration, becoming wealthy using your income stream. Thank you, my friend. It's my hobby, so it makes it easy. A lot of people I know, and I have this conversation a lot with a lot of people. Opportunity cost is something to consider. It's not just with respect to business and stuff of the like. I think a lot of people, they try to juggle 18 different hobbies. They try to be the best at all those hobbies. Choose the one that makes you the happiest. Choose the one. If you like fishing, triple down on fishing, spend all your money. But there's so many people that spend money on buying a jet ski and they do it one time, buying new golf clubs, they do it once. And I've seen it myself. I've done it myself. I, went golfing one time. I was like, let me buy these $200 Tiger Wood golf shoes. Might have used them like 3 times. So, it's just things like that add up. Buying a new car all the time, things like that. You just lose so much excess capital, and money's not everything, right? You just have to enjoy yourself. So I'm not saying cut all that shit out. I'm saying choose the one that makes you happiest. And I guarantee you're going to spend way less money and be happier focusing on that hobby than trying to make everybody happy, focusing on a billion different hobbies and losing all this money. So thank you. This means a lot. The statement, Henry. I appreciate that. That's probably not something you look at, but what's your thoughts on WBD? 2026 would be great if the shows, movies come out like Harry Potter. I assume that's Warner Brothers. I don't have an opinion. I'd have to look into it more. Monthly drip for your paycheck is $2,000 a month, and over time I'll get that into my portfolio. My guy, good man, you got to do it. Hardest thing is waiting for the compounding to take effect. Many people don't have the patience and want another 2020 to happen when 38% annual returns. Hey man, 30% annual returns all day, every day. Every day I look at my portfolio, it's up 30%. You know what I'm saying? Zach has a strong buy on PEDs, oil and natural gas and new wells. No debt with partnership with EPM. Good luck, my friend. I don't know. I don't know anything about it. Petevco. Well, it's a penny stock, and it's down 98% all time, including 56% in the last 5 years in a positively growing oil and gas market. So it's worth about $80 million. Focuses on the Permian, DJ basins. Apparently not doing well. They're not making money. Good luck with that one. Hit the thumbs up button. Much appreciated. Your current commercial fishing permit is the best investment you ever made. See? Sometimes you just got to double down, triple down on good things. But yes, feel free to reach out to me if any of you guys have any thoughts or questions about anything I said. If I misspoke, pulled a Biden, let me know. But otherwise, much appreciate you guys always coming on the channel. If you guys haven't already, we talk pretty regularly on the Cashflow Chronicles channel. Be sure to check that out as well. Let me just pull that up really quick. So we're up to about 1,200 people following us on that channel. And we do streams 2 or 3 times a week. So you can see we're pretty active. We did the post debate. We did Cashflow Chronicles on snow on Monday or Tuesday, whatever that was. We did one on Oxy the other day. So we're back on season 2. And we've had some pretty good viewership over the past few months or the past few weeks since we came back for season 2. So we've had about 1,000 people watch every episode since we put it out. So very good. Well, all right, my friends, thank you so much for stopping by, and I will talk to you guys on the next one. Cheers. Yeah.